This is the MTPredictor weekly market update for May 3rd. So we are into a new trading month here. This will be a short update. Unfortunately, one of my data feeds is not connecting this morning, so I won't be able to go into all the charts that I want to go into. We'll take a look at a little something different today, but let's start with the S&P here on the daily chart. And you can see this was the prior all-time high here. We were able to make a new high here, really just kind of shy maybe of the DP resistance here by maybe a few ticks, but you see we did begin to get some corrective action here on this little pullback here. It looks like there was some buying activity coming in, and then followed by the rally on Friday. We got the Fed meeting out of the way. You know what I'm seeing, I don't see the Fed being able to raise interest rates. Certainly not in June, probably not the rest of the year. We'll see what happens. We know they're doing the quantitative easing over in Europe, and those European stocks have really been outperforming the U.S. stocks, is what we anticipated. One thing I wanted to cover before I get too far in is, remember we talked about the month of April being a better predictor of how the rest of the year is going to go, rather than January. So if we look at here's the monthly chart here, and here's the April candle in the S&P, and we can see the S&P did close higher than where it opened the month, and that typically is a sign, well, historically anyway, that it will be a positive year for the market. And then if we look at the Dow here, let's go to the monthly chart here on the Dow. Okay, and here is the April candle here on the Dow, and that opened the month at 17,697 and closed at 787. So also an up close there for April in the Dow. And it's important to note, because we're going to look at the Dow here, back to the daily chart, because the Dow, let's move this back over. I just wanted to go back to the daily chart in the S&P. So the S&P did make a new high. Okay, here's the weekly chart of the Nasdaq, and you can see the Nasdaq also made a new high. And the Nasdaq, this is the weekly chart, again in some larger degree resistance. So if we go down to the daily chart, an area where we anticipate we may get some corrective action here, and you can see the last long trade set up with the trend here reached the target, another area we anticipate that we should get some corrective action here. Alright, but the Dow is the one that's been lagging, and you see that the Dow here, that was the last prior all-time high off the long here, and then we had the new long here. Now this is where the NQ on the daily chart had the same basic setup and reached the target, making a new high, but the Dow has failed to make a new high yet. I can't pull the chart of the Dow Transports, but the Dow Transports has also failed to make a new high. It is not confirming, so we still have this divergence out there. This TS3 is a sell signal. It's against the larger degree trend here, as shown by the STF. Well, this is blue. It's telling us the larger degree trend is up, and that tells our traders, our new traders, that they only want to take the long trades. They would avoid the short signals. But this one is interesting because we have a weekly high that came in here. This is an important high. We had an ABC pattern to the long side. Alright, so our new traders know the trend is up here, and they would stick with the long. They would ignore the short here. But our more experienced traders, knowing that we're coming off of this weekly high, look at this trade set up here with some more interest, because it is the first ABC correction after this down move. So just something to pay attention to. I'll just do the analysis here, because typically we would not, it's a little choppy, but we could look to play for a wave 3 target. In other words, this could be a 1, a 2, and a 3. Why? Because of the starting point here is a larger degree resistance level. Alright, for our newer traders, they're just going to stick with the long trade here. But we'll see what happens. We'll see if we get any confirmation from the transports, getting a new high, if the Dow will confirm. And we did have closes to the upside for the month of April for both. So that's a good sign overall, historically anyway, for the market as far as wrapping up the end of the year with some positive gains. All right, let's look at the, I think, take a look at the euro here. I'm not able to look at oil or gold because my data feeds here, but this is the euro US dollar on the weekly chart. Again, we know that the big wave 3 move down here was the fact that they're devaluing the euro and the dollar is benefiting from that. But here's our wave 3 here, and here's our rally here. Here's the wave 4 target, if you will. And you can see the high volume that came in on the turn here. So we'll see if this will reach the wave 4 target, and this is an area we might anticipate another turn into a wave 5 to the downside. So keep an eye on out for that. And then finally, I'll just bring in here, this is just these are all the automatic trade setups in the Dow on the 3-minute time frame after commissions and slippage going back to the end of 2010 to current. And you can see I've got the equity curve in blue here, and then this green line is a moving average. And what we like to, if you read our material, we talk about the cyclical nature of trading. In other words, markets go through cycles. They go through periods of good cycles and productive cycles trade-wise, and then drawdowns. And this just shows this visually, so you can see a starting point here with $20,000 and an increase in the equity curve, and then drawdown. New equity highs, drawdown, new equity highs, drawdown, new equity highs, and so on. Here was a large drawdown here, and now we've just completed a series of trades that have taken us to new equity high here. All right, so these show us the cyclical nature of those patterns that the software looks for. Once we can identify those, if we want to trade something systematically, which we don't recommend, we like to be more discretionary, those trade setups that the software generates are just a starting point. But this is, again, this is now $60,000 or basically a 200% return over that time period after your commissions and slippage are deducted out. But it started risking 2% on 20,000, and even though the account is now almost 60,000, it still only risks 2% on 20,000. But what we can do with this information is, what if we take those trade setups when the equity curve is above the moving average. So we'll be taking all these trades. Once the equity curve drops below the moving average, we stop trading. Right here it closed back above, so we take a few trades here, then it closed back below, we'd stop trading. Right, that allows us to avoid much of this drawdown. Right, here again, you start trading when the equity curve is above the moving average. Once it drops below, right, you stop trading. So what does that do to this kind of choppy equity curve? Well, here's the same data, the same trades, only taking those trades that are above the moving average and stopping trading when the equity curve moves below the moving average. And you see how that smooths things out and what it does to the return. Now your return on this same time period is 464%. So on that $20,000 account, again, still only risking 2% on 20,000, even though the account is 112,000. Again, it only hits about 4 out of 10 winners, but the average winner, where's our average winner here? Is just over $1,000, and the average loser about $438. Right, so the average winner is about 2.5 times the size of the average loser, and that's why the equity curve moves in the right direction over time. But the other important point is the drawdown. a drawdown less than 10%, which is phenomenal. If you trade any systems, a 20 to 30% drawdown is common for a good system. But anyway, we don't recommend you use our software to trade it like a system, because you can do better doing some additional analysis. So you can go through our videos and our webinars and see how we use the software and use some of the additional tools in the software to do the additional analysis. Alright, so I'll wrap it up here. We'll be back. We'll do this again next week. We'll have the public webinar on Thursday if you want to join that. That'll be included in the email that I send out. You can join the subscriber list if you go to mtpredictor.com. I'm sorry, mtpredictor.us. If you go to mtpredictor.us, right here, you can get the free PDF. It's the introduction to MTPredictor that will show the software generated signals and how to trade those, and then it'll get into some of the more advanced setups. Just put your name and email there and click the button, and that'll also put you on the weekly market update list. Alright, so we'll see you back next week. Hope you enjoyed it. See you then.